So we're going to use the same data that we had in exercise 6-2 and do the last of the methods, which is specific unit. And specific unit is the same under perpetual and periodic inventory system. And this one is usually used for inventory items that need to be tracked separately. So say, for example, we're selling vehicles. So you could track the vehicle by its VIN number and remove it from inventory. So it's specifically the vehicle that you purchase is the exact vehicle cost that we're removing from inventory. So let's just do this in terms of lipstick. So we have the same amount available for sale, except for this time it's telling us specifically which lipsticks were from which purchase. So it says January 10th, 70 was from beginning inventory. And March 15th, 3 was from beginning inventory, and then 177 was from the March 14th purchase. Then October 5th, 50 was from the March 14th purchase, and then 400 was from the July 30th purchase. So the question will have to tell us which specific items are being removed. So I will use the same process that I did, or the same setup that I did when I did FIFO. So my first step is to figure out your cost of goods available for sale. And this one already did it for us, so I'm just going to move these items down. So January 1st is beginning inventory, and then here's our purchase and our purchase. And I'll just take that double underline off, just make it one underline. Okay, so that's step one. Find out your cost of goods available for sale. Now step two is record each sale by removing the specific item's cost from inventory. So just remember, what I'm doing here is looking at my inventory account. It has nothing to do with my sales price. So I'm going to bring this information down. So January 10th, 70 units from beginning inventory. So there's 70, and the price at the beginning inventory was $12. So 70 times 12 means I'm removing $8.40. And again, maybe let's put this as a negative, so then we can show it coming out of inventory. So let me just switch all of these sales, these unit sales. When we sell it, we take it out of inventory. That's why I'm putting it as a negative. Perfect. Okay, so March 15th, 3 from beginning inventory. So I'm going to use the price of $12 per unit again. And then I'm just going to multiply 3 times 12. Then the 177 is from the March 14th purchases. So the purchase price on March 14th was 13 per unit. And instead of typing the formula in all the time, you can actually just drag. If you go to the box to the bottom and it does a thin plus, just drag that down and it'll do the formula for us, so you don't have to keep typing it in. But again, it's 177 times 13. October 5th, these 50 were from March 14th purchases. So the purchase price on March 14th was $13. And then the 400 was from July 30th. And July, we purchased those at $14 per item. So now I just need to add all these up. So I basically just calculated my cost of goods sold. And these 700 units line up with your sales. So we sold 700. and the price that we allocated was $94.27. So that's your cost of goods sold. So now my ending inventory is your available for sale minus your cost of goods sold. So $825 minus $700. So again, under all three methods, I still have 125 units in inventory. It's just this price that we're keeping as ending inventory is going to be different depending on the method. So our cost of goods available for sale minus our cost of goods sold gives us $17.23 in ending inventory. And now what I'll do is I'll calculate my sales. So just remember, sales are the same under three scenarios. So it's 35 times 700 that I sold. And let's put an equal sign right in front of that. I just want it to 2 decimal places. Cost of goods sold is what I calculated right here, $94.27. And then that leaves me with my gross profit of sales minus cost of goods sold. So that's $15,073. And if I want to calculate my gross profit percentage, I can take 15073 and divide that by 24,500. So that gives me 61.52%. So in this question, it only wants the cost of goods sold. So I'll do the 94.27. And again, don't put that in as a negative. And then it wants the gross profit. So in these questions, they could ask you for ending inventory, cost of goods sold, gross profit, or gross profit percentage.